Hello everyone, welcome back to Chapter 8 Exercise Solutions series from our Managerial Accounting course, ACCT 428. In this video, we're going to be looking at exercise 8-2A. So let's read the exercise together. It says, indicate whether each of the following variances is favorable or unfavorable. The first one has been done as an example. They're referring to this one, as you can see. And then we have this table where we have many items, including sales volume, sales price, materials costs, and so on. And then for each of these items, we have the standard and the actual data. From there, we need to compare the standard and the actual and decide whether that variance is favorable or unfavorable. All right. So this is a simple, straightforward exercise. I have copied this table down here, made it a little bit bigger so we can solve right on the table itself. So let's start with the first one, sales volume. The standard was 50,000 units and the actual is 54,000 units. Here we are referring to the number of units sold, right? So the sales volume. So having an actual sales volume higher than the standard, that is of course a favorable variance. Okay. Next one, sales price. The standard price was $4 per unit, whereas the actual price per unit was $4.10. So as you can see, the price is higher in the actual scenario than the standard or the budget. Okay, so to sell for a higher price, that's of course a favorable thing to the manufacturer. So the answer to this second item is going to be also favorable. Next, materials cost. Now we are talking about a cost. The standard is $2.90, whereas the actual is $3 per pound. So as you can see, the cost here is higher. The actual cost is higher than the standard. And because it's a cost, it's unfavorable to have or to incur higher costs per unit, right? So for this one, of course, that variance is unfavorable. Next one, materials usage. And materials usage refers to the amount of materials that is used for each item or consumed by the production process of each item or by the manufacturing of the total number of units. Either way, here the standard is 91,000 pounds of materials, whereas the actual is only 90,000 pounds of materials. So our production have consumed less material than what we had expected, and that is a favorable change. Okay. Next one, labor costs. The standard was $10 per hour, and the actual is only $9.60. So that's lower. The actual labor cost per hour is lower than the standard, so that is also a favorable variance. Next is labor usage. Standard 61,000 hours, whereas the actual is 61,000 hours and 800. Which is higher than the standard. So we needed more labor hours to produce our product than what we had planned. So that is unfavorable variance. Next, fixed cost spending. The standard was 400,000. dollars, whereas the actual is only $390,000. So that is lower. The actual is lower than the standard, so that would be a favorable variance. And finally, fixed cost per unit. Based on the standard, $8 per unit is expected as a fixed cost per unit, whereas the actual is $7.22 per unit, which is less than the standard. Again, because we are talking about a cost here, so the less the cost is, the better. So based on that, this variance is also favorable. All right, and that's it for this exercise. Exercise 8-2A. Pretty simple, pretty straightforward, as long as you understand each item. And based on the item, you notice what's the difference between the standard and the actual, and you decide whether that difference or that variance is going to be favorable for the benefit of the business or the manufacturer, or is it unfavorable. Of course, when we talk about sales volumes and sales prices, the higher the better. So if the actual is higher than the standard, then that would be favorable. If it was less than the standard, then that would be unfavorable. But when we talk about costs and materials used, or labor cost, or labor used, and so on, it's the opposite. If the actual is less than the standard, that would be a favorable variance. Whereas if the actual was higher, consumed more materials, consumed more hours, or it cost more, then that would be unfavorable variance. I hope you found this video useful. Please, as always, if you have any questions, feel free to drop them down in the comments. I'll try to answer any questions that you may have. And until I see you in the next exercise video, take care.